Yeah, when I was thinking about when I first started in options, what was sort of the least intuitive part of it, it's this concept of theta decay.
If we look at other hybrid or other EV makers, Tesla's still making money, but their profit margin has gone down.
There is a slowdown in growth of EV sales, and they have already acted on that.
Nonetheless, here are 3 reasons why Tesla stock is still tanking.
One must finally accept the reality that Elon's, white supremacist motivations is absolutely damaging the brand.
All that and more. So let's get to it. Tesla stock is up in the pre-market about 1%? That can't be right. Let's look at something with a little more somber tone to it. Oh yeah, that's much more like it. Tesla stock is down about 25% year to date. Sitting at 186.90, I'd like to think Tesla has some room to grow, considering that my bear case fair value estimate is somewhere in the 325 range. Indeed, I am a glutton for punishment, as I have a call that will expire at the end of the week on February 9th. As of right now, I have about a 1.5% return on this, around $5. Typically, I have a 100% return policy, but at this stage of the game, I'll take 50%.
Harnessing the power of options can be a tricky road to navigate, so we put together a guide to investing in options, along with some trade ideas for newcomers. I want to go draw everybody's attention to the Wi-Fi Interactive, where I have a couple of definitions. This is basic stuff for options, calls and puts. You can go long. Call, that is a right to buy a stock. If you're short, it's the obligation, and it's the inverse if we're talking about puts. But I want to move on to a topic that I was talking to you about offline. You said your number one recommendation to traders is that they have an idea of a catalyst in mind when there's with respect to a trade, and this ties into the idea of theta. Just wondering if you could break this down for us.
Theta, the monster of options trading. When you're buying calls and puts, theta is your enemy. It is designed to eat away at the premium that you paid for the right to buy or sell that stock. Now, when you're selling calls and puts, theta is your friend. More times than not, you want time to eat away at that expiration date, forcing that call or put to expire worthless. But it's not worthless if you've received premium for the contract. Once it expires worthless, you're free to sell a call or put yet again and acquire more of that delicious premium.
Yeah, when I was thinking about when I first started in options, what was sort of the least intuitive part of it, it's this concept of theta decay. So, I think a lot of folks, when they come into options, they probably have a stock background. And in stocks, it's something you can simply buy and hold. So, the Warren Buffett idea of if it's something that is attractive value, you just close your eyes and then hopefully it has compounded a growth. Unfortunately, options don't work like that. You are fighting theta decay from the very first day if you are long options. And that's simply to say, if really nothing is going on in your underlier, that option is going to expire worthless at expiration. So theta decay is a way of thinking about the amount of bleed that you're going to get in that option if nothing happens, which is why it's really important to think about if something is going to happen in the stock that you've chosen for that option.
This is very much measured in implied volatility. Here we have a 187.50 call that is set to expire on the 9th of February. Currently, the share price is at 187.05. Dealing with Tesla, I like my implied volatility to be under 60%. It's obviously going to be high. Around earnings, you can expect the implied volatility to be damn near double what it is right now, which is why I like to sell calls around earnings time. This implied volatility will directly impact the premium that you are set to pay or receive.
First, I want to introduce the concept of the covered call. We covered a couple of these last week, no pun intended. This is when an investor sells a call option at a set price and expiration date on a stock, and this is key, that the seller already owns in an equivalent amount. So you own the stock and you're looking to place a trade against it, sell a call against it. And in this case, we're talking about Meta, and we're looking at selling the 485 strike price here, that call with an expiration of March 15th, while you own 100 shares of the underlying. Can you break down this trade for us and how you're approaching it?
The reason I chose Meta for this example is, in this case, when you're selling a covered call, you're doing the opposite of being long a call option. So when you're selling the call, instead of that time decay, that theta decay going against you, it's actually working in your favor. You're actually hoping that every single day, not much happens and you get to just keep that premium in that call option because you've sold it. You get that nice yield. And again, you've covered there, you're long the stock. So, this is not a naked short option position. In specifically the case of Meta, this is a company that just had earnings. And if you remember last week, it was actually up 20% on earnings, substantial move, really wild. And, hopefully if you've been long Meta, you're pretty psyched about that. But the other thing that we know is that a big event has already passed, and another big event, perhaps its next earnings is probably not going to come for another quarter. So this is a place where we would like not much to happen. And those 485 calls that you're selling is taking advantage of the volatility risk premium that's historically baked into almost all options. You're getting about a 1.5% yield, but again, that's for about a month in time. And again, you're betting that not too much happens. If it does, your stock gets called away at that 485. So, you do retain a little upside in this trade from where we were. I think the last I checked was trading around 456.
Earnings already done for Meta. 485 is pretty high, but with the implied volatility, the premium is there. Should Meta soar to 500, you do have to sell the stock at 485. But 100 shares at 485, pretty sure you can find something to do to make that money work for you.
But Uber, where we're looking to buy a protective put. So instead of selling a call and letting time decay work for us, we are buying a put here on Uber. And kind of explain the timing with this, because we're looking at an expiration of February 16th here.
So this is a relatively short dated trade. So obviously, again, that time is not in your favor, but we do have two events that are coming up in Uber. The first is on February 7th. It's actually its earnings date. And then Uber actually has an analyst day too, where the company talks to different research analysts across the street who cover the company, February 14th on Valentine's Day. So you're really getting two events in the span of the time before that expiration, which is February 16th. So again, when you're long volatility, you've got that theta decay not in your favor. You really want some opportunity for something to happen. In this case, we have two potential catalysts which could drive volatility and hopefully protect your downside if those events are negative.
If you follow Tesla stock at all, more times than not, there is an extreme negative reaction. Think about AI days, earnings calls, product releases. If you're long the stock like I am, placing a put prior to these events protects you to the downside. I don't want to sell any of my Tesla shares, but placing this put allows me to keep my shares and make money when Wall Street doesn't understand what they're seeing. I like to use puts when we're selling the news, essentially. And as of 2024, there's been a lot of news to sell.
So we just had Toyota report its earnings. World's biggest automaker. What did we learn from their report? They're a business where they haven't made that big push into EVs, but they do have a pretty strong hybrid business.
They do have a pretty strong hybrid business, and particularly in the U.S., they're pushing that really hard, and they have that opportunity right now. Electric vehicles in the U.S., the demand is not as strong as what it sort of was expected about 2022.
Why is that? Is it because Tesla proved that electric vehicles can not only be fashionable but functional? The Model Y and the Model 3 are significantly lower than the average selling price of a brand new car here in the US. Toyota, the largest automaker in the world, does not have the best-selling vehicle in 2023, which happens to be an electric vehicle. The reason why the EV demand is slowing down is because other automakers, legacy startups included, are finding out that this isn't as easy as Tesla makes it look. Imagine if we had 3 or 4 companies that were having the same success as Tesla. Legacy OEMs would be bricks right now. Instead, they're going to push the natural stepping stone for consumers.
What we're really seeing is a transition from a mainstream, from an early adapter buyer to more of a pragmatic mainstream buyer is just taking longer than people really wanted it to. And for Toyota, the emphasis on hybrids, non-plug-in hybrids alongside their internal combustion engines mean they're a little bit protected from some of the stress of the system right now. In the US in particular, there's only 1 electric vehicle, 2 electric vehicles from Toyota, 1 from Lexus and 1 from Toyota, and it's a lower part of the market. It's a lower part of their sales, and they're really strong in hybrid, as we talked about. If we look at other hybrid or other EV makers, Tesla's still making money, but their profit margin has gone down.
Industry-leading margins. Nobody on the planet has margins for battery electric vehicles that even come close to Tesla's margin. But you're right, they're coming down. I guess when we're talking about these pragmatic buyers, I wonder if that's helping. No, I don't wonder. The Model Y was the best-selling vehicle on the planet.
The outlook for EBIT of $10 to $12 billion, even at the low end of that range, it's above what the street expected, and it was exactly what the street cheered when General Motors gave that outlook last year. When you read the earnings release, they're just reiterating the same story, that there is a slowdown in growth of EV sales, and they have already acted on that.
The slowdown in EVs is because you can't make them properly or make any money off of the ones you're making. You're the reason why there's a slowdown in battery electric vehicles.
They've been able to identify $2 billion of cost savings relating to materials, freight, and manufacturing. And that's interesting in the context of Ford's global footprint, because you guys nailed the story. They are cutting back on the output of EV supply because the demand's not there, but they're also having success with their legacy business. And if you look, for example, on the narrative of their profitability outside of North America, they're getting traction with that Ranger pickup in Europe, and they have a lower capital base in China that's working out for them. So it's good stuff.
It's anything but good news. In the future, all automotive transport will be electric. All automotive transport will be autonomous. It's all well and good that you're making money now, passing on dividends to investors, placating them like the ancient Romans did with the Colosseum games and bread, when in actuality, you should be using that increased dividend to go into your research and development to make compelling battery electric vehicles. Instead, you're taking the easy way out. And I want to put this on the record, because 5 years from now, I'm going to be right here saying the exact same things when all of the legacy automakers here in the United States have their hand out in order to save their companies. And I'm going to be in the camp, no, you did this to yourself.
Pre-market trading off just about 1.7%, lost to over 3% yesterday. Is it going to turn it around?
I was looking for a really bad pun like Tesla's stock downshifts to neutral, but you don't really shift in a Tesla, right? It's just an electric vehicle.
I suppose his comedic career didn't really take off at the stand-up level. Good thing he's got a face for TV.
Nonetheless, here are 3 reasons why Tesla stock is still tanking. Let me fire these off here. Really, performance for Tesla has just not been good. You look at that last earnings report, earnings have been softer than expected for 6 straight quarters, so the street is getting concerned about the company's performance.
Earnings have been softer. He's right about that, but I suppose operating on 3 continents, ramping up new products, refreshing old ones, and preparing for the future product roadmap, softer earnings? It's like there's a fog around the company, and you can only see like 2 or 3 inches before your face. How can you not extrapolate that Tesla has the highest selling vehicle in the year of 2023? The Model Y has only been around for 4 years, and it's the highest selling vehicle on the planet? But you're right. The earnings are softer, and I'm pretty sure that this is all that they have. They've exhausted all the bullets in the gun, if you will.
Number 2, Wall Street profit estimates on Tesla are actually starting to fall. If you go over to Yahoo Finance, you click on the analysis section on the left rail, you can see some of the earnings trends for Tesla over in recent days. Over the past 30 days, 2024 EPS estimates for Tesla have fallen for this year by about 72 cents. Now, keep in mind, Tesla shares are still valued about 56 times forward earnings. Not a good scenario when you see earnings estimates declining and your price is still priced for perfection or a growth stock.
It's music to my ears when I hear the EPS is actually dropping for TSLA. Priced for perfection? These have no idea what's just around the corner.
And then lastly, you have questions about Elon Musk here, the human being. The Wall Street Journal dropped its second story over the weekend, digging into his potential or reported drug use. Who else is running in his fear? And I think this has begun to weigh on sentiment around Tesla. So you have all that, and then really a nifty chart I think is also relevant to the Tesla story here as well. It comes from the folks over at Car Gurus, and you can see the continued downtrend in used Tesla prices for various reasons, whether it is quality concerns or people just don't want these things, they have range anxiety, whatever it is, prices for Tesla continue to fall.
Oh, hold up, that went on a tirade. One, Elon Musk, the person, has very little to do with Tesla, the company. So I'm actually glad that that is his number 3, and it's probably the biggest reason why Tesla stock is tanking. Very little to do with the fundamentals of Tesla's future growth. He is an amazing key man that just so happens to be unpopular with about half of the country and many of the news outlets here. But let me go ahead and nip this used car thing in the bud. Here we are at the Tesla website. We're going to look at the Model Y because it's the best-selling vehicle on the planet, and why not? Back in 2020, when I purchased my Model 3, I paid more for the Model 3 than what the Model Y is before the $7,500 tax credit. In 2021, my beautiful wife purchased the Model Y. Can you guess how much she paid for it back in 2020? I'll tell you, $55,000. And I guarantee you, this Model Y is much, much better than the one we just traded in. How much did we trade it in for, you might ask? We were able to get $33,000 for a used Model Y with 50,000 miles on it. But that was a couple of months before you could just tack off $7,500 off of the sticker price. If you qualify for the federal tax credit, the Model Y is priced at $36,500. Talk about the bargain of the century. No one in their right mind is going to buy a used Model Y when they can get a brand new one for $36,500. And you might be asking yourself, hustle, why are the Model Ys so much cheaper now than they were back in 2021? Well, I'll tell you. It's because of Giga Austin. Giga Austin is pushing out roughly 5,000 Model Ys every week. And it's not Tesla's goal to make the most money they possibly can from these vehicles. Oh no. The objective is to make as many as you possibly can and put as many customers in them as you possibly can. Sure, you gotta make money. I mean, you are a business, but the real money comes after the individual has purchased the vehicle. Insurance, infotainment, etc., etc. So yeah, Tesla's used car prices are on the decline for now. But should the demand for Tesla's vehicles exceed their production level, expect the new car prices to rise, and in turn, the used car prices to rise as well.
We had the problems in Tesla. It's been the problem child of the Mag 7.
Mag 7, this is the Lone Ranger, Han Solo, if you will.
Because now there's some chatter about how Musk is going to work AI into Tesla.
Yeah, and analysts don't like this because this has been like a theme where they think it's going to take his attention away from Tesla naturally and that he's spreading himself too thin.
What? Is this bizarro world? I mean, any company that mentions AI gets a bump, but for Tesla, it's the inverse. Elon Musk is spreading himself too thin? Have you lost your mind? Don't impose your limitations on Elon Musk. You'll find yourself coming up short and left wanting.
I mean, I don't necessarily think that's the case. The guy runs 3 companies pretty well, but I don't necessarily think that this is all that much news because we already knew that he was pushing into AI and it's already been voiced as a concern. We've seen selling as a result of that. This note today we did get out of Daiwa was pretty negative, but it's so reactionary. It's like all these analysts right now are like downgrading shares, cutting their price targets. We're down 30% from highs. So feels a little bit late to the game. They did give a price target of 195 that was down from 245. So pretty substantial, but they cited the ramifications of increasing the focus on government's concerns that could limit Tesla's propensity to invest for a very long term. I mean, basically, I feel like the concern is just how well Elon Musk can run his company. And I think that right now you can't necessarily blame one person for some of the vast selling we've seen. I mean, right now, market share is being ate up by competitors like Mercedes, Ford, GM. We saw Tesla had about half of the market share of all EVs in the US last quarter. That was down from 62%. Everyone's all concerned. But hey, half is still really strong. This is still the largest company as far as its revenue in terms of the EV space. So I feel like people are so quick to want to punish the stock because of Elon Musk. And that's why I don't even necessarily get caught up in the AI stuff, because I don't really necessarily see it having a fundamental change with Tesla.
Shares of Tesla, are tanking to start 2024. They're down more than 25% now. And some analysts getting a bit nervous. The latest, the team at Daiwa Capital Markets downgrading Tesla to neutral with issues surrounding CEO Elon Musk piling up. Our next guest just says he's lightened his Tesla position substantially.
Not light enough, apparently.
What do you think of that take, Ross? You agree with it?
Yeah, I mean, there's just a list of concerns that's just one of them, and probably one of the least important of the concerns, considering the rapidly declining earning estimates and the lack of any transparency of what Tesla sales will be this year. And so, Tesla went from a very fast growing company with lots of potential to now basically, sort of almost like stalling and, really stuck, almost desperately trying to sell their vehicles now.
Industry leading margins and the best selling vehicle on the planet. Ross, have you turned into a bear? Do you not understand what's going on here? Ross's emotions have clouded his judgment so that he can't see any more than 2 inches from his face. Just sell all of it. Just get rid of the entire position and invest in something like Ford or GM or Toyota.
You guys have lightened your load in terms of how many shares you own, but you still own a lot of shares. So I'm just, what keeps the faith when you're looking at Tesla here? What keeps you in this stock? There's a big universe of stocks out there. So what keeps you in this one?
Well, you have to look at our situation. We bought Tesla at $3 a share. So for us, it's all profit. So every time I sell Tesla, for many of my clients, there's a tax consequence of up to 30% of that profit. So, that's something we have to really consider when we're selling the stock. Now, many of our clients do have it in retirement accounts like IRA accounts, which gives us a lot more flexibility. But it's really about what allocation is right for our clients. And Tesla was our largest holding for a very long time. But when, it really started with the anti-Semitic comments and we had clients calling to sell their Tesla stock who are now very happy because they sold more like at $250 a share.
Well, maybe they're going to die pretty soon, because in 2030, my guess is they're going to regret letting go of those shares.
And, we continued to believe that Elon is eroding the value of the brand. And so we continued to sell the stock where appropriate to get it down to an allocation where we're at now, which is around 3% in our ETF GK, and for clients around 3 to 4%, depending on their situation. Now, we do have some, Tesla fanatic clients that, don't want to give up their stock, but it's hurting people a lot this year. And finally, the cost of Elon's behavior is really hurting shareholders. And it's really unfortunate, because the reason we're holding the stock is the long-term potential of Tesla is immense. So, it's this catch-22.
Damned if you do and damned if you don't. But you are selling the shares. It seems ridiculous to me, in my opinion. But I suppose that's why I don't manage money for anyone else.
A lot of people, Ross, when they think of Tesla, they think Musk. And when they think Musk, they think Tesla. I mean, they think of him as just foundational. Are you suggesting you'd like him to sort of exit stage right here?
No, I mean, really, it's just to shut up. I mean, he spends his weekend just railing on immigrants and the immigration issue, and he himself being an immigrant, and the perception of somebody who's intelligent, who can get an H-1B visa, saying that people who don't have educations don't deserve to be in this country is really not a way to sell cars, especially in a state like California, its biggest market, where Tesla sales are down year over year. One must finally accept the reality that Elon's, white supremacist motivations is absolutely damaging the brand, because he is equated to Tesla. But to pretend that he's not damaging the brand at this point is simply ignorant.
Did we just call him a white supremacist? Look, I live real close to the border. I love my Latin brothers and sisters. And there are many people here in the state of Texas that share Elon Musk's view of immigration. It does no good to call those individuals white supremacists. There's no chance of compromise when you call someone a white supremacist. And that's what we're looking for here. Compromise. Ross is letting his opinions of Elon Musk the man cloud his judgment, his financial acumen for the long-term growth of Tesla. And there's no telling when the stock is going to just vault, and you know it will. In Ross' own words, the value is enormous. Regardless of whether I like Elon Musk's tweets, I'm not selling a damn share of Tesla because that train has left the station. That's about as much of Ross as I can endure right now. The incessant whining, it's getting to be a bit much. Maybe he should take a page from his own book and just shut the up. In conclusion, please be careful if you're dabbling in the options market. It's a good way to watch your money evaporate into thin air. Take a measured approach and never ever go in there with money that you absolutely need. Toyota, Ford, oh yeah, they're using the stepping stone to make a lot of money. Hybrids are the future? Probably no, that's not the answer when the Model Y is the best-selling vehicle on the planet. By 2030, mark my words, Toyota will not be the largest automaker. It will start with a T, but it'll probably end in Tesla. And we've reached maximum fear, uncertainty, and doubt. I mean, Ross Gerber, Tesla bull, is now calling Elon Musk a white supremacist. We have definitely reached peak FUD, ladies and gentlemen. Now, I don't agree with everything Elon Musk says, and I don't have to. Trying to control anyone's behavior is like wrangling a damn hurricane. It's pointless, it's futile, and you're bound to get yourself hurt in the process. That's all I've got for you today. Be easy. Peace.